right, so I'll start to make some quick introductions. So first off, for those of you who don't know who I am, my name is Max Chera. I'm from Express Capital Financing. And what we do here on our webinars is we like to educate as much as possible and share the information with the world, really, and everyone that's looking to get involved in real estate. Maybe you're already involved and you're looking to better your processes or learn from someone that's, done a little bit more. So we're always looking to bring some people like Joe Florentine, who has been with us a couple of webinars already. Joe and Express Capital I'll just say me and my father and Joe have known each other for a couple of years already from a networking event. Have spoken about doing a lot of different things together. We network all the time. We learn from each other, which is really the cool thing about real estate. Just because you're really good at one thing doesn't mean you can't learn something from somebody else. And tonight he's really going to talk to us about how he has developed his portfolio. Joe, if I'm not mistaken, it was 60 million in 6 years. Am I saying that right?
That's correct. Yes.
60 million in 6 years. That's averaging 10 a year. That's amazing. That's unheard of. And tonight we want to learn, more about, how you've done it. And you're going to give us really the breakdown of, your story, I'm sure, as well as, what you need to do to get there. Joe, you also and your daughter have written a book with the, what's it called again? Remind me.
The Foundation of a Successful Life.
Right. And that's based off of the teachings of the other book, right? Tell me more.
Napoleon Hill. Yep. Think and Grow Rich.
Right. Perfect. Well, Joe, I'm going to let you take the floor. I know you have a lot to share with us in the group, and we're excited to hear it. So by all means, go ahead.
All right. Sounds good. Hi, and welcome, everyone. I'm Joe Florentine. I'm the founder and CEO of Florentine Holding Company, and I'm the co-founder and CEO of Success Cornerstone. And today I'm going to talk to you guys about the direct path to real estate wealth. And wanted to thank Max and Marty for having me on. You guys really do a great service for your client base with all these webinars. It's really something terrific to see. So anyway, a few things before we get started. Please try to turn off anything, any distractions, because the next 30 minutes, what I'm going to go through might change your financial future forever, if you're ready for it. I'm going to show you how you can transform your real estate business into a residual cash flow machine that's not only going to change your financial life, but possibly the lives of generations to come. There's the opportunity to create something from scratch that your grandchildren will benefit from. So, and I don't mean that to brag or boast, but I can say that with 100% confidence because I actually did it. And tonight I'm going to show you how. So if you grab a pen and paper, maybe you want to take some notes. I'm sure you want to refer to them back later. And if you would, please hold all your questions to the end. I'll be happy to answer whatever you guys want at the end. So here's what you're going to learn in this presentation. First, I'm going to talk to you about the paths to in real estate to avoid, because I've been down them. Some of you may be on them already, and I know exactly where they can lead. Then I'm going to show you the direct path to true real estate wealth, really how it can actually be accomplished in just a few years, starting with the knowledge you're about to gain here tonight, and then some work on your end. I'm going to show you the exact roadmap that I used to go from less than zero to over 60 million in real estate in only 6 years. And really the best way for me to do that is by telling you a story of how I kind of did it along the way. I'm going to also show you how to avoid losing money and how to put yourself in a position to prosper right now using none of your own money. I think that after this brief session, you might not look at real estate investing the same way anymore. So anyway, who am I and what makes me qualified to talk about getting rich and wealthy in real estate? I'm 61 years old. I got my real estate license right after high school at the age of 19. So I've been in the business for 42 years. And when you think about it, it's biblically longer than Moses wandered in the desert. So I've experienced a couple of things at this point, right? I worked in both the residential and commercial markets, so I'm very familiar with the ins and outs of both. I'm also a certified self-help coach. I've coached hundreds of people one-on-one or through classes, courses, programs on how to be successful in life and how to make a fortune in real estate. I've been featured on a lot of radio stations, podcasts, print publications, and so on. So what I'm going to show you tonight, I'm not going to discuss a theory about real estate with you. I'm going to show you the actual facts and experience and take you down a path that I believe you'll benefit from greatly. So let's get started with the paths to avoid in real estate, really the rocky ones. Some of you might get mad at what I'm going to say over the next couple of minutes, but because you believe that this path is the right one that you're on right now. And you know what, maybe for you it is, but if you want to achieve some real wealth in real estate, I believe you're really going to want to listen to what I have to say and why I have to say it. I'm going to tell you the whole truth and nothing but the truth. So help me God about real estate tonight. So, as I mentioned, I've been in this business for 42 years. This is me and my dad when I graduated high school and just getting started out in real estate. Those first 31 years that I was involved in real estate, I wandered through real estate. You know, maybe like some of you, I thought I was on the right path, but I really wasn't. I was what you would generally categorize as a residential house flipper. So I buy a home, a small 2, 3, 4 family, fix it up, and either sell it right away or maybe rent it for a while and then sell it. I was a realtor on some deals. I did some small 2, 3, 4 lot subdivisions, little condo conversions, 4 and 6 unit places, but all in the small residential world. I got to tell you, during that time, those 31 years, I made a good living when times were good, but I really struggled like everyone else when things went bad. And in this business, the house flipping business or residential market, working in that small market, there's a lot of good times. When the market turns on you, it can really be devastating. So just as I mentioned, I was in residential real estate for 30 years. Here's a pie chart of my career. Tonight, I'm here to save you those 31 years if you're interested. So let's talk about it for a moment. I was doing for that time what everybody else in real estate was doing. Buying foreclosures, fixing them up, reselling them for a profit, paying my bills from the profits, and doing it again and again and again. And most of the time doing really well financially, probably a lot better than most. I mean, during those years, I got to live in those big, beautiful homes, drive the Mercedes and all that wonderful stuff that comes with it. But when the market would take a downturn, like it did around 1990, 2001, and then the real big one, 2008, 2009, it was devastating. And see, in those times, I don't care how smart you are, how hard you work, you're fighting market forces that are out of your control, and everybody in that business is all in the same boat. Bottom line, you're only as good as your last deal with those. When times are good, it's good. When times are bad, it's bad. In retrospect, I literally wasted 31 years on the wrong path because it was really subject to market conditions that were completely out of my control, like downturns in the market. And believe me when I tell you, downturns are going to happen again. The real estate market is like a roller coaster sometimes, financially and emotionally in the residential market. If you get caught with a bunch of homes you're trying to flip in one of these downturns that you see on the top line of this real estate values chart, you could be in big trouble. I've seen downturns take down the most successful residential investors that I know. I've seen them lose their homes. I've seen their wives leave them, all those bad things. Now, I don't want to sound negative about residential house flipping, investing, the building business. But if you're in that field, when the market's good, like it is right now, today, you're making really good money and everything is wonderful. But just beware and stay cognizant of what's going on in the market at all times, because when things turn, it can be a very risky and difficult business. If you find yourself on the wrong side of one of these big waves, it comes in and can sweep it all away on you. And I know in those 31 years, it happened to me twice, almost 3 times. You know, there's a lot of factors that enter into a market decline, and we don't have to understand them all. But please note this very, very, very important point. I'm going to give you the one thing that you need to pay attention to if you're going to stay in that business, right here and right now. Very simple. Market value swings, especially down cycles, always start in California. We're East Coast here, gives you a good heads up. If you're going to be in a house flipping business, pay close attention to that market. If you see that go down for more than a quarter, those declines are coming to a market near you very soon. Start to move out. Look at this in California here. We're going on right now. Pending home sales rose 8% in May, marking the highest level since 2005. That tells a story. And the story it tells is you certainly have some time here on the East Coast, but be careful with your acquisition starting next year, because there's a storm brewing for a whole lot of reasons. And we just don't have time to get into them all. It's a ways off, but rest assured it's going to be coming. Anyway, my whole point is here, you don't want to be holding single family investment homes, small properties when that market turns. What you're going to want to be doing is holding recession-proof income producing assets. And we'll get to that in just a few minutes. So the last time this wave hit me, it was late 2009, right? The very bottom of this real estate values chart over here. By the time we had sold off all our flip homes, small rental properties, small development projects, and because of all the losses we had to take on those and use an equity line against our own house to cover those losses as we went along, by the time we sold off that last property, that home equity line was well over $1.5 million. And then virtually with no income, we had to sell that home to and really walk out with nothing. So it's late 2009. I find myself turning 51 years old, living in a rented house with my family. We have no assets and debt of over $120,000. Now, not the most desired place to be, but I remember I worked hard. I mean, really hard for those 31 years. And most of that time I've done really well. But now this was the result. I was screwed here. And it wasn't just me. Everybody in that business I knew lost everything. As a matter of fact, most went bankrupt. So when that wave comes, it's just too much to combat. I spent a few minutes on this because I don't want to be negative, but I don't want to see this happen to you at all. And remember, it's 31 years of doing that. Be careful on that path in the next couple of years because it can get very dangerous. So that's the end of the wrong path. Again, I didn't mean to sound negative on it. I just wanted you to be cautious about it. Now I want to tell you about the benefit that came from all this, how those 31 years of wandering down that wrong path concluded and how the new direct path opened. I want to explain this quickly because it will illustrate to you how we got here today, and much more importantly, how this now leads you, maybe for the first time in your life, to a path that you can achieve complete financial independence, not subject to market conditions, just by copying what I did the next 6 years in the real estate business after those first 31. So the new path starts now. We're broke. We're living in that rented home, 50 years old, and we're really struggling. One night, my wife comes to me and says, hey, you know what we really need to do? We really need to buy some apartment buildings. This way, when this happens again, we can live off the cash flow from those rentals. Because, we're not getting any younger now. This real estate crash happened when we were 30. And now, again, as we're hitting 50. And if we keep going this way and it happens again, we're 70 years old, we're going to be in big trouble. And then, well, always listen to your wife, right? I said, all right, very good point. Very good point. But I'm like, well, how am I going to do that? I have no money. I can barely pay the utility bills. And she's like, okay, I got it. But keep it in mind. I'm convinced that this is the way out of our mess. Out of this mess. And I told you that story because that conversation that night was one of those moments in life you just never forget. It planted a seed in my mind, one of hope. I didn't know how, but for some reason, even though we had no money, I began to believe that she was right about it. That conversation with my wife and then what happened the very next day after she said it to me stays vivid on my mind to this day. I mean, there were life-altering events, like I'm hoping today might be for some of you, an eye-opening experience. So that very next day, I happened to run into an old friend of mine, a business associate from a dozen years ago. He had also been a residential investor and an appraiser back then, and I bet I hadn't seen the guy twice in the last 12 years. So we started talking about what was going on in our lives and our business. My friend Todd tells me that he's now a commercial real estate appraiser, and he likes it much more than residential. There was a lot more money in it and everything else. And he was very happy with it. And of course, I explained my current dilemma that I can't find a way to make $1 right now. Anyway, he goes on to tell me about a guy he knows in Georgia who teaches commercial real estate financing online. And he thought I may be good at it. He's seen some people making some really, really, really big money with it. And I'm thinking, okay, hey, what do I have to lose? I'll talk to the guy. So when I got back that afternoon, I called the guy in Georgia. We talked for a bit. I explained my residential real estate background. He explains to me that this course will teach me how to arrange financing for larger real estate projects and get paid a commission for putting the deals together between the investors and the lenders. I said, okay, it sounds really good. Sign me up. I'll give it a shot. And at the end of the call, what he said to me was something that I'll never forget. He said, this is going to be a big change for you. You're going to have to put that residential mindset aside if you want to make some real money. If you pay attention to what I'm about to teach you, you're going to be astonished and what you'll learn in this course, because it's actually easier to buy a 100-unit apartment complex than it is to buy a single family rental home once you know how to do it. That statement to me sent chills down my spine. I mean, really, what was the odds the day after my wife's suggestion, someone who I'd never heard of, recommended by a guy I ran into who I hadn't seen in maybe 6 or 7 years, would make that statement? And, you know, when I look back at it, the odds were actually pretty good. I had attracted him and that whole situation at that time, but that's a conversation for another day. So I take the guy's course. I take what I learned about financing from that course, and in a very short time, I learned to think like the money people do. I learned to think like the bankers, like the lenders, like the investors for the first time in my life, not like a real estate guy. I saw firsthand what went on at a much higher level and actually how simple it was compared to what I had been doing for all those years. From that point, once I understood how it worked, within 6 years, we had thousands of tenants paying us rent every month, and it turned into a cash flow machine that I could have only previously dreamed of. And here's how I did it. Quite simply, I took a different path. I switched from buying residential properties, meaning 1 to 4 family homes, to buying apartment complexes, self-storage facilities, RV parks, warehouses, restaurant buildings, industrial parks, assisted living facilities, and all of those bigger properties. And as it turned out, he was right. It was easier, and it's not only easier, but substantially more profitable than messing around with single family homes. And all I did was switch paths in real estate onto the bigger properties. You might be saying to yourself right now, oh, well, that's great for you, but I don't have the knowledge or the money to do that. Well, I'm here to tell you, don't worry. As you can see back there at that particular time, I didn't either, because really there's 2 things that hold you back from taking this path. One is the knowledge to be able to do it, and secondly, the money. And well, that's why we're here. I want you to know something very important, that you can actually replace money with knowledge. For just a minute, let's do this. All right. Don't worry about money at all. Put it completely out of your head. And think to yourself, what would you rather own? Would you rather own this 45,000 square foot retail office building here, or this single family home? Would you rather own this 40-unit apartment building here, or this single family home? Would you rather own this 4-story waterfront restaurant building, or this single family home? Would you rather own this 400-unit self-storage facility, or this single family home? Which ones do you think would be more valuable and provide you with more money if you own them? I'm sure we're all in agreement. We'd rather own those bigger properties. I'm going to show you how to actually step up and start buying these kinds of properties with none of your own money in just a few minutes. You remember I said a minute ago that the bigger deals were actually easier, right? That's what the guy had told me, and it was 100% true. Those deals are easier and more profitable because, unlike dealing with single family homes, there's no proof of funds or paper trail of where the funds came from. There's no petty little home inspections that you have to deal with. There's no calls from frantic realtors at 9 o'clock on a Friday night when you're out having fun. There's no issues with sellers moving out or holdover tenants. No worries about comps, because as I'll show you, you can tell what the property is worth just by the net operating income. You don't have to run around looking for comps. You don't need W-2s or personal qualifications for the loan. There's no Fannie Mae limits because you already own a few other homes. It's no nonsense. It's business. It operates from 9 to 5, Monday to Friday. And for me, those operating during those hours was like a dream come true. The direct path to real estate wealth, here it is, summed up quickly. Here's really how it works. We use a specific formula or recipe to structure our deals. Same formula every single time. We use other people's money to acquire these assets, not our own. We use other people's labor to manage the properties. All we do is put the deals together, and we do it once, and we get paid over and over and over again. And that's phenomenal. And that's how you really create true wealth. But, you know, just like everything, I'm running through a lot of things fast. You need to start to understand some of the basics or the rules of the game. So I just want to touch on a couple of these things so you can start to wrap your arms around what we're talking about. Well, if there's 6 top rules, so you get a feel for the business. Here's the first 2. Don't lose money. Don't gamble. Know what the value is going to be before you start. This is not running around looking for comps. It's a mathematical formula. All right. It's completely different. Don't buy based on future values. meaning don't count on a property going up in value to make your profit. If you wind up doing that in any manner, shape, or form, it's definitely sending you down the wrong path and can lead to trouble somewhere down the line. So look at on to the next 4 rules. Always make an offer with a simple letter of intent. Now, we make a lot of offers on a lot of properties. We make offers constantly. And the way we do that is a simple 2-page document that we email, that we do ourselves and email over to the broker or over directly to the seller, whoever we're dealing with. It takes 5 minutes to do. This is not some 14-page contract with seller's disclosures and lead paint addendums and all those other things that you need to fill out just to see whether you're going to get a deal going or not. All right. So we always make an offer with a simple letter of intent. Rule number 4, don't manage the property yourself. Hire someone, or else you'll spend your day dealing with the tenant issues instead of creating wealth and structuring your next project. We show you how, in a minute, I'm going to get to a program that we put together, but we show you how to work on your business instead of in your business, and there's a big difference. Rule number 5, the most important people in the deal are the ones with the money, right? The golden rule applies no matter where you are. We show you how to get the money to do the projects and how to treat everybody, the lenders and the investors, right, so they'll keep coming back to you over and over again to do more deals with you. And finally, the most important of all, the success formula. The end value of the project must not exceed 70% of the total cost. Now, let's zone in on that one for the moment because it's the most important. How to structure a deal, the 70% rule. For a moment, don't worry about where the money's coming from. We'll get to that in just a couple of minutes. I came up with this formula a decade ago, used it over and over and over again to get what I had wanted in those first 6 years. Then I taught my son and his friend Don and Tiffany and several others how to do it. All of them have become multimillionaires over the past 4 years, doing exactly what I'm about to show you. As a matter of fact, I mentioned to Max before, my son and his partner, Don, I mean, these guys are in their 30s, excuse me, just closed on a $15 million deal today. I mean, I don't know how much money they made, but it's, you know, take a guess. If the cost has to be at 70%, right, that's about where they're going with it. And they follow that formula over and over and over again. They become super, super wealthy. So here's how it works. When evaluating a deal, always make sure you can refinance the property within 2 to 3 years and recapture all of your costs so you can move those same funds into another deal. Number 2, to effectively select your acquisitions, you start from the end and you work your way back to the offer. And that's the path and the roadmap to success. So how do we do this? Again, we cover all of this stuff in detail in our program, but let me hit on a few of the highlights for a few minutes. Here's the formula in its simplest and broadest terms. 1, we determine how much the property will be worth once we've leased it up and have everything at market rents at the moment. We call that the repositioned end value. It's all based on future cash flow after expenses. Number 2, for a purchase price, we won't pay more than 70% of that repositioned end value. That includes repairs and improvements, which is actually nothing to do with the current value or the seller's asking price. All right. The reason that we do 70% is that we know that lenders will provide long-term financing for assets that have been repositioned, and we can refinance it, pull our entire costs back out, and use the funds again for another deal. That's why we do 70%. And as you can figure, once we've done that, we'll have an increase in value of at least 30% over our cost. All right. And we'll also wind up with a net income each month after that new mortgage payment equal to at least 70% of what that new mortgage payment will be. It's just a phenomenal model. You do it once, you just keep on repeating it over and over. So let's look at it. Let's look at it in an actual deal. So let's say we purchased a 46-unit apartment project, right? That was actually, this is my first deal. And we determined using the formula I just spoke about that it would be worth $3.1 million at the end of it, right? We would pay up to what, 70% of that, or $2,170,000. So when we're done, we'll have a $930,000 equity position plus annual cash flow after expenses, including the mortgage and everything else, of $80,000. That's one deal. Now, it doesn't get too much better than that. Don't worry if you're not understanding it all right now. I know I'm trying to cover it quickly because we have a limited time, but I'm sure you can easily see that there's real good money to be made with this system, right? Next, where do you get the money? I told you before, you don't need your own money. What you do need is knowledge. The money comes from two sources. It comes from lenders and it comes from investors. And I can tell you with complete confidence that there is more money available to you than you could ever imagine for good, solid real estate deals. You just have to know how to structure it so it makes sense to the people with the money. All right, a very important point. We discuss all of this in detail in the upcoming program. So first, let's look at the lender portion of it. All right, it's lenders and investors. Lender. To approach a lender, it's very simple. We prepare a simple 3 to 4 page loan summary. Where we think like the lender and answer the lender's questions up front. They're really the question is this a safe and profitable loan, right? So let's look at the funding for that 46 unit deal that we just spoke about just a minute ago, right? The cost was let's say we're buying it for $2,170,000. The lenders for unstabilized properties, and when I say unstabilized, mean the place might need some work, it has some vacancies, some management problems, that kind of thing, will lend you about 65% of that purchase price, or 1.4 million, right? You can get these loans from Marty and Max, right? Please remember, from them. Please remember, this loan qualifies based on the income of the property. This is not your W-2. So don't start getting scared of the numbers, because the property is what qualifies for it, not your personal income. So, all right, so we got $1.4 million of that 2.1 we need from the lender. We still need 760,000, right? Where do we go next? We go to the private investors. For the private investors, we prepare a simple 3 to 4 page executive summary, almost identical to the loan summary, that answers the question again: is this a safe and profitable investment, right? This summary is designed to get the investors excited about the project, so show them how much they'll make. But what it really does is show them how they will have absolutely no risk, and they are guaranteed, no matter what, to get their money back and get paid at least 5% interest every month while the money is out. All right, let's look at this. Here are some of the benefits that we offer to private investors, and you'll find that if you use this exact formula that we've been using for the last 10 years, within a very short period of time, you won't have enough deals for all the funds that's going to become available to you. All right, let's look at the benefit to investors. Benefit number one, they get monthly interest payments of 5% on the money while it's invested. Benefit number two, we offer them a personal guarantee on the funds that will be repaid to the investor within a certain time, usually 2 to 3 years, depending on how the deal is, right? Benefit number three, we also give those investors a percentage ownership in the project equal to their investment amount. So if the project costs 2.1 million and they're investing 217,000, they own 10% of it, right? 10% of the cost. They own 10% of the profits, 10% of the monthly cash flow, 10% of the equity, 10% of the proceeds from an eventual sale, they get 10%. Then what we do is we refinance this property in a couple of years, give them all their money back, and they still own a piece of the deal and get paid every month for the cash flow. Then my first deal I did was in 2010, the first couple. I have several investors that have had all their money back from deals that we did 10 years ago and have gotten paid every month for the past 10 years. And they already had all their money back. For an investor, it doesn't get any better than that, right? So let's look at this 46 unit deal that we turned around. Let's say that we did it in 2 years. Let's look who benefited from this, right? We're just talking about the investors benefiting. Let's look at this for a minute. Your cost was $2,170,000, right? The bank financed $1.4 million. The investors funded the other $760,000. You put in zero, not a dollar, right? The value of that property is $3.1 million. So the gain is the difference, $930,000. What did the investors get? The investors got interest payments for 2 years at 5%, $76,000, plus they get 35% of the equity in the project, right? Because they're the ones that put up the money of that 930,000. So they get 325,000 plus the 76,000, over $400,000 they made. Plus they still make about 28,000 annual cash flow after they got their money back. If you went and did that for somebody, what do you think the next question would be? You bet it's going to be, you have any more deals? And that's exactly what happened to me. Let's look at what you get. And then put $1 in, you own 65% of that project, right? The investors took 35. So your equity now personally is over 600,000, no money in, but you supplied the knowledge and structured the deal. Plus your share of the annual cash flow would be about $52,000. Look at this. Do that same small deal once a year for 5 years, and you'll have a net worth of $3 million and an annual income better than $250,000 a year. And life's pretty good at that spot. I did that same exact thing about 20 times in that 6-year period while I was working. All right, a few more questions. Excuse me. Price range, how do we find these properties? Where do we buy them, right? Price range, we made our home in that $1.5 million to $5 million market. And I think that's where you should probably go. And there's a good reason for it. It's too much money for the smaller investors, and it's also too little money for the big guys. So there's a lot less competition in that little niche market that we've been working here. How do you find those properties? Well, Google commercial real estate for sale. There's many sites. One of the main ones, loopnet.com. There's so many properties out there you couldn't imagine. Different contacts, different brokers, off-market stuff. I cover all that stuff in the program we put together. But it's easy to find the properties because you're going to make a lot of offers, so you'll be able to get the deals. Where do you buy them? Well, I'm a New Jersey guy, but I did my best. Actually, my best in Florida and the Georgia markets. That's where I went to. But there's a lot going on, a lot to discuss, and picking your best market, what you're most comfortable with. But we get into detail on that in the program. But rest assured, you can use this exact same formula anywhere in the United States. All right. You can buy in your own backyard, or you can buy it on the other side of the country. It's going to work the exact same way. Right. What assets do we buy? What do you go out and buy? Max and me and Max and Marty have talked about this several times. Here are 3 favorites. All right. There's a lot of others, but this is the best for our business. We talked about earlier the single family homes and the small rentals, not holding them as investments because at some point the market turns to get you in trouble. What you really want here is lots of people paying you small amounts of money each month. Solid rental properties like these, right? Multifamily apartments, RV parks, and RV and mobile home parks, self-storage. These properties produce monthly cash flow, and that's the real trick to becoming wealthy. It doesn't matter if the market's down at all because you're collecting income each month. And when you're collecting income each month, you're never in a position where you're forced to sell if the market gets bad. All right, a very significant point there. So these assets are good when times are good. They're also good when times are bad. When a downturn happens, you want to be in assets that are stable and expanding. In bad times, people go from homeowners to renters, right? Hence owning apartments. They downsize from single family homes to mobile homes, hence owning mobile home parks. And in both cases, they need somewhere to store all their extra stuff and self-storage. So by owning these properties, you put yourself in a position to profit. While all the residential investors are losing their shirt, if the market changes, you'll be sitting pretty and collecting money every month. Let me show you something really significant when you own these properties. Watch this. I call it the magic of a small rent raise. Let's say that you purchased you own a 400 unit self-storage facility, and you just raised the rent there $10 a month on it for each unit. Now, no one moves out for $10 a month. We own a lot of these, and we know where it goes. But you raised it for $10 a month for 12 months. That means on a simple rent raise, you put an extra $48,000 in your pocket each year. Plus, that property is now worth $800,000 more because of that additional income to come in. Same thing with apartments. If you own a 100-unit apartment building and you raise the rent $40, it winds up being the same exact thing. $48,000 more in your pocket each year, and it's worth another $800 more. And it really, really, really doesn't get better than that on those small rent raises. And especially if you wanted to sell and you move the rents up, you create that additional value. You sell them off for huge profits if you want to. So let's get into the direct path to real estate program that I've been mentioning. You know, what I've shared with you is really just the tip of the iceberg, and I'm sure you have tons of questions about it. Yeah, but I've shared this information with a lot of people over the years, and all of them have really begged me to put together some sort of comprehensive program that would lay out exactly how to do all this. So I did that recently and developed a brand new program that I'll be launching on Monday, September 13th. Right? The program is going to teach you step by step exactly how to grow a fortune in the real estate business. It includes 5 days worth of online instructional videos with me where I walk you through the deals and explain the entire process in detail. The videos are going to be recorded and shared too. So if you're unable to attend the online sessions, you can always watch it at your leisure. The program starts, the way it starts out is it starts by helping you to build confidence and belief that this can happen for you. You know, really everything all starts in the mind. It starts with setting goals and changing your mindset. And, you know, I mentioned earlier at the beginning, I'm a certified self-help coach. And what I've been doing over the past few years is really just helping other people succeed in life and the give back portion of my life. And I'm very well qualified to help you develop your goals and your mindset, as I am one of the very few certified Napoleon Hill instructors in the world. That's a guy who wrote Think and Grow Rich, probably the most famous self-help book ever. Additionally, over the last couple of years, my daughter and I also started Success Cornerstone, which is dedicated to helping people live a happier, more successful life. We wrote our first book dedicated to that end, entitled The Foundation of a Successful Life. It's got great reviews. We've been featured in many publications, podcasts, radio interviews, and so on. It's really, really well written by Erica, covering topics like what makes you happy, setting goals and achieving them, building inner faith in yourself, using hurdles in life to your advantage, and all that stuff. So anyway, that's the start of the program. We spent a little bit of time on that, getting your mind wrapped around where you're going with this thing. All right. What's taught in the program, and here's what I'll cover during that program: tips for goal setting and building confidence. All right, we just talked about that. How to go about finding the deals, how to negotiate the deals, how to raise the money for the deals, how to reposition those deals so they have greater value, how to refinance the deals or sell it if that's what you choose, how to basically develop a long-term residual income stream. So I guess ask yourself, is this program for you? I mean, I kind of think, I don't know, but I kind of think it's for anyone that doesn't want to spend the rest of their life trading time for money, who wants to do something once and then get paid over and over and over again, who wants to have the time to enjoy life through receiving residual income each month. I mean, that's the way to live, at least in my book. So let me tell you more about what's included here. First, when you sign up, you'll get 5 days of videos beginning on Monday, September 13th, where I explain each step in detail, like I said, and show you how to look at real estate investing in kind of a different way. We look at the deal, finding the deals again, making offers, putting the deals together, structuring them, raising the money, working with lenders, working with investors, hiring the management people to run the projects, stabilizing the assets, adding value, and much more. By the time you're done with these 5 lessons, you'll be ready to confidently move forward down this path. This portion of the growth program is valued at over $600. Next, you'll get a comprehensive guide to becoming a multimillionaire in real estate. The guide covers some of the things we discussed today, plus a whole lot more about putting the deals together, finding money for the deals, dealing with private investors, a bunch of industry contacts, and more. This portion of the program is valued at over $100. But it is a very special part of the program. You're also going to be getting all the forms and documents you need to put everything together. From that simple offer form I talked about before, the letter of intent, to the loan summary that you need for the lenders, the executive summary for your investors, all his Word documents, the notes, the guarantees, the membership units, an operating agreement for LLCs that you'll set up that'll work for your lenders, protect your investors, and still give you 100% control of the project. A standard commercial project and a lot more. I mean, these are documents we developed over the past 11 years, and I can't begin to put a price on these. And it cost us, I'm sure, tens of thousands over the years to put it all together. Really almost priceless. That's going to be included with the program too. So to review, what you're going to be getting when you sign up for the 5 online lessons with me, worth over 600, the real estate guide, which is worth 100, and all the forms that we came up with an amount of priceless. So Usually something like this would cost thousands of dollars, right? But I'm offering it out for just $297. Like I said, I'm in the give back portion of my life. My motivation here really isn't making money as much as it is helping people become a lot more successful in life. So if you're willing to learn and put in some work, you're going to be able to be, once you're done with this, become financially independent, never having to answer anybody again, and enjoy the life the way that you want to enjoy it. I almost forgot here. Well, just something else. Also, we're going to include in there a copy of our book, The Foundation of a Successful Life, is also included in the program. So let's get you signed up right now. If you're interested, just open a browser and type in joeflorentine.com. Again, that's joeflorentine.com. You'll see a page there where you can get quickly signed up. But the best part of this right now is that my friends, Marty and Max, who are really, really good guys, and both of us wanted to give back to the group and all the people that they do business with. So I'm going to actually lower the cost from $297 down to just $97 for today only. Tomorrow it's going to be $297 again, but for you guys and tonight it's only $97. So you get everything we talked about for $97, right? But it's just today. It's only for today. This is what the website looks like. You can just go and see. It's very simple to enroll. Just a couple of clicks. Again, it's joeflorentine.com. It's only $97 for everything, which is kind of a crazy deal of the online sessions, the guide, the book, the documents, everything for the price of going to dinner. You can start a brand new career here. So anyway, in closing, I got to say, if you apply the lessons from the program that you learn, you can become very wealthy within just a few years. I know we covered a lot quickly, but I assure you that with a little studying, right, on the program and then some hard work, you can become very successful in this business. So listen, you're at the right place at the right time. I've shown you a direct path to wealth in real estate from actual experience, stuff that I've done, not BS. It's not only the most profitable path, but it's also the safest path and the path of least resistance, really, to financial independence, if that's what your goal is. So I hope you'll be joining us for the program. Thank you so much for your time today. I look forward to connecting with you guys on September 13th. Thank you very much. Max, I'll give it over to you.
So much, Joe. That was incredible and knowledge filled. I know I'm going to definitely have to listen to this again because I definitely wrote down some things that spoke to me, but there's definitely some more nuggets that I have to re-listen to make sure I grab them. Just so everyone knows, by the way, now is a great time to put any questions you have in the chat box or the Q&A box, and I will make sure that we get to them. And in the meantime, while we wait for some questions to come in, I just want to, if it's okay with you, Joe, I just want to point out a couple of things that you said that, that I wrote down that kind of spoke to me. The first thing is the rocky road. I can't tell you how many people feel like you got to work hard, right? You got to feel like you're working to get somewhere, but working smarter is so much more important. And it's not about how hard you're working at the end of the day. If you're getting a lot of resistance, that should tell us something. That's the market speaking to us. And you want to work on something that's more fluid and, allows you to repeat it. And that goes into the next part, which was where you said about it's more about having the small money and a lot of those people, because not only does that make it a lot smoother, but at the same time now, you're not putting all your eggs in one basket. You have one bad tenant, you're not in a bad spot. You have a luxury home, you have a bad tenant, there goes your property. So there's a lot more that I could talk about that you mentioned that really stuck with me, but it looks like we're starting to get some questions in, so we'll get to them. First off, Krishna, yes, this is recorded and we are going to post this on our website. For those of you guys, I would love for you guys to go to Joe Florentine's website tonight and sign up for $97. Honestly, that is a steal. You're getting a full package and a business for $97. You're not just getting something to work with, you're getting a business planner. And that's priceless. So for those of you guys, go on tonight. For those of you who are going to delay and wait a little bit, we will make sure that we send out a email tomorrow with all the information that you need and where you can find a copy of the recording. CJ is asking, I'm currently talking to the owner of a 103-acre, 68-unit property that needs around $750,000 in rehab. Is there any way I can get help from you before September?
So he wants to purchase. What is the purchase? Absolutely. You know, just send me. Matter of fact, we have Eric has, if you go on my web on the joeflorentine.com, there's an email link there. It's info@Success Cornerstone. If someone needs some help with something, just have them shoot an email over there, and I'd be happy to help them out.
There you go, CJ. Head on to his website, get in contact with Joe. He'll make sure to help you out. If you need anything as far as the financing is concerned, feel free to check out expresscapitalfinancing.com, and we would be happy to talk more about it with you. Krishna is asking, this is for Joe. So if a property is, let's say, $3 million, and I offer 70% of that, I get 65% loan and 35% from the private investor. So, yes. Right. So I think we're just to make sure, Krishna, that we're understanding you correctly or answering your question, 70% of the $3 million is what you're offering, and then 65% of that is coming from your lender, and 35% of the 70 is coming from your private investors.
Perfectly said.
We're going to keep it open for another minute or two, guys. Any other questions you have, please do let us know. Joe, I guess that means you did an amazing job explaining everything, even though you would call it rushed. I kind of, at least I was able to follow through with everything. But if anyone missed anything, now is a great time to ask it.
It's a lot of stuff to cover in just a short time. So all I can do is kind of touch on where it is, explain it a little bit, and move on to the next subject. But, you know.
And while we're saying that, you know, one thing that I mentioned a couple of minutes ago is that you're not just getting, you know, assistance, you're kind of getting a business planner, right? And the reason I'm bringing that up again is because you mentioned that you have to hire someone to run your properties. Now, what I took from that was more than just the fact of, oh, you know, you get to have your Friday nights off. No, I took it as you have to treat this as a business, right? A lot of people get into real estate. They're like, oh, it's because I'll be able to have the flexibility. I could go here, I could do that. The only way you're going to access that flexibility is if you build it like a business and you have, Target doesn't have one guy doing the cashier, one guy and the same guy doing the stock. No, there's one person that does everything. They have their roles. Everyone does their job and they operate together as a business. And you have to treat your real estate the same way, or else you're going to be the one person doing everything.
100%. You'll be fielding the calls from with tenant problems instead of working on building your business. You hire people to do those things, and you focus on actually building wealth for yourself. That's really what the key is.
100%. And then Mark is asking about Express Capital's website. I'm about to put it right now in the chat box so everyone can have it as well. And I will put also Joe Florentine's website so you could click on it. And CJ is asking, what is your normal PM cost in percentage? I'm assuming he means project manager.
A project manager? Well, the management usually gets paid about 8%. That's generally what we have. We wound up building everything in-house, so I don't sub the management out to other people. I hire them, and those people work for me. But if I had to go outside that, you're probably giving them about 8% to handle it outside of if that makes sense.
That definitely makes sense. Everyone's business is going to operate differently. Someone's going to have, you know, in-house contractors. Someone's going to have in-house financing. Whatever you're best at, use it to your advantage. But make sure you always have the professionals doing the best they can. Amazing. Well, Joe, we definitely appreciate having you here with us again. Thank you for all the knowledge that you share with us and our viewers. And we're looking forward to growing and doing more of these with you as well. And like I said, everyone who please go to Joe Florentine's website tonight, check it out, get familiar with it. Hopefully you'll sign up. For anyone that has, wants any more information, we'll be sending over another email as well. And we're looking forward to seeing you guys all next time.
Yeah, hope to see you guys on September 13th. I'll be there launching this stuff, and your opportunity really to make 2022 really a change year. So anyway, I hope you enjoyed it, and pleasure. Thanks everybody for listening. Thanks, man.
We can't wait. Thank you so much, Joe.
Okay, have a great one, guys.
You too, guys.
Okay.